Welcome into this week's On the Spot. I'm Tony Mulvey, but we'll get started here. This week in the spot market's been one of those, it's kind of been this weird market, right? Everything's been kind of flatlining, even post Memorial Day. We really haven't seen this uptick in freight volume. I mean, we saw a little bit of a uptick in freight volumes. Rejections really haven't done anything. I mean, they're kind of flatlining, and rates are doing the same. And we talk about the NTI, and we'll pull up a chart here in just a minute that has the NTI, and it's got, and fuel prices, diesel prices. And what we've seen is the NTI is flatlining at 292, and diesel prices are rising to the highest level that they've really ever been. And we'll pull the chart up here, and you'll see that we've seen that 292, and then diesel prices at $5.75, quickly rising up there to close to that $6 range. And what's a little interesting here is you haven't seen, and this is worth noting, is that NTI is a spot rate. And spot quotes are typically all-in rates. They don't break out fuel. They don't necessarily, I mean, they include fuel, but they don't account for it. And that's kind of why we're not seeing any uptick in this rate, even with these rising fuel prices. So really the spot market as itself is seeing that limited activity. But I think what's interesting, and this is a chart we've brought up quite a lot recently, is this rates chart. And it's the difference between the contract and line haul NTI. And we'll pull it up here, and you'll see it's down at the lowest levels. It's right around the lowest level. So it did drop down to about 90 cents, being that spread between contract and that spot line haul rate. But right now it's about 87, 88 cents. So still down there in the depths of where it's been for the past few weeks. What's interesting though, this is on a lag. So what you're seeing is what happened kind of 2 weeks ago. And that's because our contract rate data is at that 2-week lag. And really contract rates so far have been in this $2.90 range for about the last month and a half. And we really haven't seen that slow decline or any decline in that, which you would kind of expect to see. I think we have Kevin Hill joining as well. And Kevin, maybe you could talk a little about why we haven't seen contract rates come down any yet, whereas spot rates have they're down. I know the line haul rate right at that $2.02 range.
Thank you, Tony, and great to be here right now. I think it's the lag in the data, the lag in decision making. I think not everything, even though we see it in our mind, is going to happen instantaneously. It doesn't. It takes time. It takes time for shippers to rebid, to go through the decision-making process of what to rebid, what lanes make the most sense to rebid, and then test the waters of renegotiating some of the contracted lanes. So that takes time. And then it takes time for that contract data to be reported as well. So I think we are seeing a lag in time. And the research we've done, we're about to do it again. Refresher for 2022 is South spot rates that they do move contract rates. It's at a lag. It just takes time to implement. I think that's the way most economic data and economic trends work as well. You'll see interest rates going up, and it takes a little bit of a lag of time for the effects to show up in economic data and kind of the actions of economic actors as well.
Yeah, and I think it makes a great point about interest rates. I mean, you look yesterday, mortgage demand falling to 22-year lows. I mean, that's when you think about that impact and like housing and things like that have really been a driver of some of this freight demand. I mean, people buying houses, which means buying more durable goods, things like that. You're starting to see that slow down. And I'll pull up another chart, and it's our inbound. This is a chart that's gotten a lot of press over the past couple of days. This is our inbound ocean TEU volume index, and it's fallen down to basically the high, what you would think of like Chinese New Year back in 2020 before the pandemic. That's about where we're at right now. I mean, we're talking 30+% declines in the last month. And everybody's talking about import shipments are still up. Import shipments are still up. If you look at this chart, you'll see, well, we didn't really start seeing inbound ocean TEU volumes. So these are the volumes that are moving on the ocean right now. They're not at the port. They're not waiting in the queue to clear the port. These are things that have just left within the past few weeks. Well, they're falling down. It's not early May, early April. We're still pretty strong, and that's why you're seeing import demand or import shipments still elevated. And that's not going to necessarily go away instantly. But I mean, we talk about the stable market. How long can it be stable when you see these volume levels on the ocean fall off that aren't going to be here for 30, 45, 60 days?
You're exactly right. I mean, the import traffic that everyone had been talking about Shanghai opening back up and another surge coming, there's just no data to support that right now. No data at all that we're looking at to support some kind of surge or kind of cavalry coming to rescue trucking and to push volumes up again. I mean, it's going to be a bleak back half of 2022 for trucking. It's going to be the down part of the cyclical nature of the business, and it's really time to prepare for it.
Yeah, and I think what's interesting, I mean, I see it on LinkedIn a lot and things like that, is back to school, back to school, back to school. Well, if back to school stuff isn't here, right? There's nothing that shows that back to school stuff is coming, or like, I look at this chart and everybody's like, we're going to see back to school, and guess what? We're declining, and that stuff should already be on its way or here.
Well, it's funny because I mean, this is just a guess and not a real prediction, but it's kind of humorous. I mean, last year's back to school still might be sitting in warehouses.
Yeah, you're very right. Well, Kevin, that's all the time we have today. Thank you so much for joining me on this week's On the Spot, but we're going to take a quick break, and we'll be right back with more FreightWaves Now.